I want to ask you some things. What comes to your minds when you heard the words budget? According to PwC, budget is an estimate of revenue and expenditure over a specific period, usually a year, to support planning or decision making. For taxation purpose, a budget is also important because it helps estimate more expenses and tax obligation. This allows individuals or businesses to manage their tax liability effectively. What are the objectives of a budget? First, a budget helps to plan income and expenses by estimating the expected revenue and costs within a specific period. Second, it helps to control spending and avoid unnecessary expenses. Third, a budget allows resources to be allocated efficiently to different activities or departments according to their needs. Besides that, budget also helps to monitor financial performance by comparing the actual result to achieve financial goals. Lastly, budget also support decision making by setting financial target and measuring performance.
Okay, now let's move on to the impact having budget and effect if doesn't have budget. A budget is one of the most important tools in project management because it provides a clear financial plan that guides the successful completion of a project. One of the main benefits of having budget is that it creates alignment and clarity among all stakeholders. A detailed budget clearly defines the project scope, required resources, and expected timeline. When everyone understands the financial plan and project expectation from the beginning, misunderstanding can be minimized. Team members, managers, clients, and suppliers can work toward the same objective, reducing unexpected changes and costly debates during project execution. A budget also plays a crucial role in the early detection of project risk by continuously comparing actual spending with the planned budget. Project manager can quickly identify cost overrun, scope creep, supplier issue or project delay. Detecting this problem early provides an opportunity to take corrective action such as renegotiating contract, reallocating resources, adjusting schedule or reducing the project scope before the issue becomes more serious. Early intervention helps protect both the project financial performance and its overall success. In addition, a budget supports accurate forecasting and effective cash flow management. It serves as the foundation for estimating the expected cost to complete and the estimate at completion, allowing project manager to predict future financial requirements with greater confidence. Budget also help organization plan monthly billing, monitor incoming and outgoing cash, and maintain a healthy cash flow throughout the project life cycle. In conclusion, having a budget provide clear planning, support better decision making, help identify risk early and improve financial management. Therefore, every project should have a well-planned budget to achieve its goal successfully. A budget is important for every project or business. When there is no budget, many problems can happen. One major problem is poor cash management. Spending and billing may become irregular, causing cash shortage. Another problem is slower decision making. Without a budget, there is no clear plan about who should spend money, when it should be spent, and why it is needed. As a result, stakeholders may argue about expectation and decision, and can take longer to make. This creates more confusion and friction within the team. Not having a budget also leads to weaker learning and credibility. Since there is no financial baseline, it is difficult to compare planned costs with actual costs. Future cost estimate may remain inaccurate because the organization cannot learn from past mistakes. Over time, clients and stakeholders may lose trust in the company planning and management. In conclusion, not having a budget can cause cash flow problem, delay in decision making, and loss of trust. Therefore, preparing a clear budget is important to help a project run smooth and successfully.
Present Budget 2026 focusing on personal tax relief in Malaysia. It will explain the key change and example how it benefit taxpayer. First, vaccination expenses. Income tax relief of up to 1,000 provide for vaccination expenses incurred for self, husband or wife or children, covering the following vaccine such as HPV, influenza and COVID-19. This will be expanded to cover all vaccine, register and approved for use by the Ministry of Health. Second, childcare and kindergarten relief. Income tax relief of up to 2,000 along with the additional time-bound relief of 1,000 previously granted for fee paid to childcare center or kindergarten for children aged up to 6 years old, still with the Department of Social Welfare or the Ministry of the Education Malaysia will be considered into the total claimable tax relief of 3,000. This relief will be expanded to include daily care centre or after-school transit centre registered with the Department of Social Welfare for children aged up to 12 years old. Third, life insurance and all family takaful. The scope of the income tax relief for life insurance premium or takaful contribution for self, husband or wife will be expanded to include children. The eligibility criteria for insured children to qualify for individual income tax relief on life insurance or takaful contribution as well as education and medical insurance premium are as follows. First, children under the age of 18 who are married. Second, children aged 18 and above who are married and pursuing tertiary education. Or third, children with disability who are married with no age limit. Learning disability relief. The existing relief of up to 6,000 for expenses related to assessment and diagnosis, early intervention program and rehabilitation treatment for children aged 18 years old and below with learning disabilities such as autism, ADHD, Down syndrome and specific learning disability will be increased to 10,000. The total individual income tax for medical treatment expenses will be maintained of up to 10,000. 5. Interest fee to tourist attraction. This is new temporary relief for year 2026 only. The relief of up to 100 for expenses on interest fee. Expenses on interest fee eligible for tax relief include tourist attractions such as museum, theme park, national park, marine park, zoo, geopark, culture and art program.
And I will be presenting the corporate tax updates under budget 2026. I have selected 5 key updates that directly impact local businesses, SMEs, and foreign investors. Number 1, the Foreign Source Income FSI tax exemption. The government has extended the tax exemption on foreign dividends and foreign capital gains until 31st December 2030 for companies, LLPs, cooperatives, and trust bodies. This provides long-term regulatory certainty and encourages corporations to repatriate overseas earnings back into Malaysia. Second, digital upskilling for MSMEs. To accelerate digital transformation, micro, small, and medium enterprises are eligible to claim a 50% further tax deduction once every 2 years for expenditure on AI training recognized by the MyMahay National AI Council for Industry. Third, the implementation of the carbon tax. Carbon tax will be introduced in 2026 with an initial focus on heavy emission sectors, specifically energy, iron, steel sectors, to drive corporate investment into green technologies. Its implementation will be coordinated with the National Carbon Market Policy and the upcoming National Climate Change Bill. Number 4, the 2% tax on LLP profit distributions. To align tax treatment with company dividends, individual partners receiving profit distributions from limited liability partnerships that exceed 100,000 ringgit annually will now be subject to a 2% tax. Number 5, Visit Malaysia 2026 tourism incentives where eligible tour operators bringing in at least 1,000 foreign tourists annually enjoy a 100% tax exemption on incremental income for Year Assessment 2026 and Year Assessment 2027 to boost international tourism competitiveness.
To wrap up, Budget 2026 introduces several tax measures that benefit both individuals and businesses. For personal tax, the government provides targeted tax relief to support individuals and families. These measures encourage healthcare, education, childcare, and family financial protections while helping to reduce the financial burden on taxpayers. For corporate tax, Budget 2036 introduces initiatives that encourage business growth, innovation, and digital transformation. It also promotes sustainability through green technology initiative and carbon tax initiative, while strengthening Malaysia's investment and business environment. In conclusion, Budget 2026 reflects the government's commitment to strengthening Malaysia's economy through effective tax measures. The personal tax initiative improved the well-being of individuals and families, while the corporate tax measures encourage business competitiveness, innovation, and sustainable development. Together, these initiatives support better financial planning, economic resilience, and long-term national growth. Budget 2026 is not only about collecting taxes, it is about creating opportunities, supporting people and businesses, and building a stronger, more sustainable future for Malaysia.